Hi guys, I'm Nicola McKenzie, co-founder and insurance specialist here at Dunham McCarthy. And in today's video, I'll be bringing you a life insurance Q&A session. So to find out more, stay tuned. Now, before we get into the detail of today's video, guys, to show your support for this channel, if you enjoy the content and you're considering taking life insurance out, or you've got an existing policy that you might want to review, then make sure that you head over to our website, which is dm.mortgage, and there you can book in for a free insurance review. And also, if you do ask us to arrange a policy that we recommend, we deal with high street and specialist insurers, then we do offer that service completely free of charge. And it also includes a complimentary will writing service over at mylastwill.co.uk, because arranging life insurance, it's also a sensible idea to make sure that you've got a valid will in place, so that if the worst does take place and happen, that again, you know that your loved ones are well taken care of. Okay, now let's get straight into the Q&A session, guys, with the first question, which is, what is the difference between terminal illness cover and critical illness cover? I see people mix the two up all the time, and it catches so many people out when they come to us. They've already got cover in place and they tell us, I've definitely got critical illness cover, and we'll say to them, the price you're paying looks like it could be terminal illness, not critical illness. And it's really important, guys, that you understand the difference between the two things. They are not the same. So terminal illness cover usually often comes free of charge with life insurance policies. Now, usually the definition for a terminal illness policy to pay out, usually a consultant has to confirm that you have less than 12 months left to live. In that scenario, most insurers will pay out on diagnosis of whatever that condition is. It could be terminal cancer, for example. Critical illness cover, on the other hand, is very, very different. So let's say that you've got cancer, but it's not terminal. In many cases, cancer's picked up very early, stage 1, stage 2. It's generally only a stage 4 cancer that's often going to be terminal. So let's say that you've got an early stage cancer. Your terminal illness policy isn't going to help you in that scenario, but your critical illness policy, depending on who the insurer is, because they all have different definitions, but most insurers in that scenario would pay out for a stage 1 cancer. So the point being, critical illness cover, usually you'll pay a lot more for it when compared to terminal illness, which is often free with life insurance. The reason being because you are much more likely to get a payout on a critical illness plan compared to a terminal illness plan, at least before retirement age. So I hope that answers that question. The next question is, how much cover do I need? Now, this one, guys, I'm afraid is really impossible to answer, because people really need to understand that the amount of life insurance you need is very much on an individual case-by-case basis, because it's essentially looking at the loss. If you're not around, what is the financial loss of that event happening? And that's really what you're aiming to insure. So giving you an example, if you've got a mortgage debt, then it's probably likely that you would want the mortgage debt repaid. So you'd want enough cover to be able to do that. But then we need to look at things like, do you have dependents? And that doesn't just mean children, adult dependents, a partner, a spouse. In which case, if you were to pass away, it could go beyond the mortgage, because your children and or partner could also be at a financial loss. Again, depending on whether or not you're the main earner. There's so many different variables. It's very difficult to look at how much cover you need without looking at a financial assessment of what comes in, what goes out, what you're responsible paying for. But typically speaking, people would like to cover and repay debts, and they also want to look at covering their lifestyle in the event that they're no longer around. So next question, what is the cost of life insurance? Again, I'm going to keep this one fairly vague, because impossible question for me to answer. And I'd also say in answer to this question and the one previously, that's where I'd really encourage you to go over to our website, dm.mortgage, and book an appointment, because free of charge, we will help you and give you advice on both of these areas, because the cost of life insurance is going to depend on your age, your health, whether or not you smoke, how much cover you're taking out, how long that cover is going to run for, the type of cover, who the insurer is, the comprehensiveness of the policy. So I've mentioned here that, arguably terminal life insurance, there are less variables compared to critical illness cover when you're comparing insurers, but there are still variables. So for example, I mentioned earlier on that most policies to pay out under terminal illness would require your life expectancy to be 12 months or less. There is one insurer I can think of that doesn't have that restriction. You might pay a bit more for that insurer, but again, they are a little bit better in quality when it comes to looking at your life insurance options. And again, there are other value added benefits that you can tag onto life insurance policies that, again, in the current climate with NHS waiting lists, can be really, really useful in terms of getting you private scans and that kind of thing. Again, those options might cost an extra few pounds, but they can be worth their weight in gold. So difficult one to answer, but that is what the cost is generally based on. Are premiums fixed or can they increase over time? Great question. So life insurance policies can be either. So you can have, similar to when you take out a fixed rate mortgage, for example, you can have it where your premiums are fixed. But unlike a fixed rate mortgage, if you go for what's called guaranteed premiums on a life insurance policy, then they don't come up for review generally after 2, 3 or 5 years like a fixed rate mortgage would. So let's say that I take out life insurance for 25 years on a guaranteed premium basis. My premiums will stay fixed usually for the full 25 years, and that's a real big advantage to, and I encourage people to consider life insurance. The younger you are, the healthier you are, the fitter you are, because you could lock in a really good rate. Now, on the flip side of that, there are policies that can be reviewable, so that being that the insurer can change and increase the cost every usually 5 years. But then there is another option outside of that where the premiums can change, and that's something called index-linked policies. So index-linked policies are where you might want, depending on why you're taking the cover out, you may want the cover amount to keep pace with inflation, in which case then typically the amount of cover that you take out will increase either by a certain percentage or retail prices index, depending on what option you choose. But also the cost of the cover would also go up in line with that. But with those options, you often do have the flexibility to pause those increases. So there's a few different ways that the premiums work on life insurance policies, but I hope that helps. Next question, is the payout under the policy tax-free? Now, this is a tricky one because when you pass away, the value of your life insurance will be added to what's called your estate. That's essentially the collective figure of how much you are worth, if you like, when you die. So that's your assets minus your liabilities. You're left with what's called your net estate. Depending on how much that is, will depend on whether or not you would be liable to pay inheritance tax. That's the tax that you pay on death. Now, the rate of inheritance tax is 40%. You pay above a certain amount depending on your situation and circumstances. However, I do want to point out, this is one of, again, I've got a video on this, but this is why it's really important to consider putting your policy into what's called a trust. Now, here at Dunham McCarthy, we do arrange life insurance policies free of charge into trust. Because we do also have a whole department, which are behind me, that specialise in estate planning. So unlike a lot of other brokers, we do tend to provide more sort of trust/tax advice because it is an area that we are heavily involved with. But ultimately, where a policy is in trust, what it can often do is reduce or even mitigate an inheritance tax liability on the life insurance proceeds. That's me giving a very brief summary of one of the benefits, many benefits of a trust. but you can protect a life insurance payout from inheritance tax, again depending on personal circumstances, but it is possible, which is why it's really important to contact us when you're looking at taking cover out. And then the last question, is there a waiting period before the policy becomes effective? That's a really good question. Now, the majority of insurers, depending on the type of policy, but often term assurance policies, there isn't a wait period. Again, this is insurer specific, so you have to check with the insurer, but generally speaking, often you'll find that there isn't a wait period. So if you're covered and you start the cover yesterday, you could get hit by a bus today, and in many cases the policy will pay out subject to the terms and conditions of the insurer. Now, I will just mention, a lot of insurers do have a wait period depending on the cause of death. So often you will see an exclusion for suicide or self-inflicted injury for the first 12 months within a policy. Again, of course, that depends on the insurer, but that's a common exclusion that we tend to see. And it's also worth mentioning with over 50s plans, so often they don't require any medical underwriting. So often you can be excluded for the first couple of years of the policy. Again, very general answer to that question, because of course it's specific to each insurer. But I hope that Q&A has been useful, guys. If it has, make sure that you hit the subscribe button so that you don't miss any future videos. And if you are considering taking life insurance out for your loved ones, make sure that you head over to our website, dm.mortgage. There you can book in for a completely free insurance review. And if you do accept a recommendation from one of the insurers that we recommend, high street and specialist insurers, we compare. So we look at lots of different options to find the right deal to suit your circumstances, but we don't charge any fees to help you to arrange insurance. So I hope that's been useful, and I will look forward to seeing you in my next video.